Morning, everybody. It's the 18th of May. We are Signal Centre Talking Ball. I'm Joe Nober, joined by Steve O'Hare. Good morning, Steve.
Good morning.
Everything all right?
Everything's lovely, mate. Everything's lovely.
Good.
The
No
sun is
rain
shining.
today at the minute.
No, the sun is shining at the minute. And I did read somewhere yesterday we're going to get 17 days of sun.
Okay.
So,
That would be very nice.
yeah, that's a bit of a warm front.
Lovely, lovely. Okay. So, what that will bring probably is more and more people going out and about and mixing. And of course, we are opening things up in the UK, but the government has continued to urge caution after the restrictions were eased following data showing a rise in the number of cases of the Indian variant of the virus. Obviously, still a rush on to get these vaccines pumped into as many arms as possible. It looks like there is some easing elsewhere across Europe as well. Italy's planning to phase out its curfew rules. And New York will lift its mask mandate for fully vaccinated people, as the amount of shots nears 50% in the state. We've also had Joe Biden say that he intends to send another 20 million doses of US vaccines abroad by the end of June. He seems like a really nice man, doesn't he? Oh, Biden
Yeah,
just
he
keeps
does.
his nose out of it and he's just a nice man. It's refreshing, isn't it?
Yeah, it looks like your granddad, doesn't he? So sort of
Yeah.
like, you can sit there and have a coffee with him and you'll have some sweets and stuff. Yeah.
Yeah, he has shifted his stance a little bit on the conflict between Israel and Hamas, though, telling Israeli Prime Minister Benjamin Netanyahu that he would support a ceasefire following days of criticism for stopping short of doing so. And after the White House defended its policy of quiet diplomacy, that was. So we'll wait and see what happens there. We've also had the Turkish President Erdogan stepping in, criticising what he describes as Biden's support for Israel's military campaign and risking a further deterioration in ties on that front. Elsewhere, in terms of news, Michael Burry, who is an investor who rose to fame as part of The Big Short. Any of you have seen the or read the book. He made billions by betting against mortgage-backed securities in the financial crisis. He's actually taken quite a sizable position short in Tesla. It's not the first time he's done it, but it seems to be gaining quite a lot of interest at the moment. The shares in Tesla are down by around 35% from their January peak. So we'll wait and see what happens there, whether or not he's right. The fact that the news have picked up on it now probably means he's sort of in and out of it and done. So now it will just be a case of people pumping it back up for him, maybe.
Very cynical, Joe. No comment.
No. So we're on the front foot by looks of things on equity markets this morning. That was led from Asia overnight. We've had some data out this morning. Overnight highlights. There was a disappointing Japanese GDP figure, but in the UK we had UK jobs seeing a welcome 15.1k decline in claimants, despite expectations that we could see an additional 25.6. So the unemployment has dropped into a 6-month low of 4.8%. And we do have quite a few GDP numbers out today to keep an eye on. So all happening. So let's get stuck into some charts. Steve, do you want to start, or should I kick off with? Go on. I think it's more interested on your side.
Just on them unemployment figures, are we still furloughing at the moment? Has furlough stopped, or is it still
ultimately the real test will come once the furlough scheme drops off. So yes, we are still furloughing.
Yeah. So just add the number of furloughed people to the number of unemployed, and we'd probably get a more realistic figure.
Yeah, maybe.
But I've spoke to a lot of people over the last few weeks, months, whatever, and a lot of them, especially in construction, they were really sort of like they've been shocked about how hard it is for them to get labour, because what they have seen is that a lot of people have been paid on the furlough scheme, and they're sort of like they're not interested in doing the extra work. So the weekends, that sort of like they can't get the guys on the site to do it because they're getting paid to sit at home. So in fact, that you've got to sort of stay on top of something like that in all the industries, so you don't get sort of people taking the piss out of it. Anyway, let's move on. FTSE, again, we talked about this quickly. The weekly hanging man candle. I'm a little bit nervous of this one. This for me feels like we could be a little bit toppy. On the daily chart, we saw another hanging man candle yesterday. Although we've extended higher this morning in early trade, we've seemed to pull back from there. So a few signs of maybe topping out. The 4-hour chart on the FTSE forming a bearish outside candle. That's a bit of a scary one as well. So have we completed the retracement, the pullback? On the DAX, really want to sort of talk about, I mean, we've got the same on the weekly chart. We've got the hanging man candle. We got the daily chart, the hanging man candle, and a shooting star looking candle at the moment. Still a long way to go to the end of the day. However, we talked about this yesterday, and I was talking about our gun to head and was talking about our stop. And I did say, there's your stop, 15,545. We managed to get up to 15,000.
Been pipped on it again, have you?
No, 542. So hung in there. Obviously, this was our intraday trade, but I sort of took this trade myself, and I was just like watching it this morning, thinking, am I going to be a happy Steve or a really grumpy Steve after being stopped out by another tick? But I'm still a happy Steve, and it's come back out, and we're sort of like moving lower at the moment. So I'm really happy Steve. I'll be more happy when it actually plays out and it does what it does. But obviously, this for me as well indicates potential for even a double intraday, well, intermediate double top. So double top here, and obviously the big double top is the one I'm targeting. So that we can have a short-term double top here, a break of 15,350, and I would expect to see a sell-off equating to, oh, a little bit higher than that, mate, equating to a measured move target of 15,200. So that might be my content head trade. You've got it early. On the US side of things, obviously, again, hanging man candle on the weekly chart, so buyers beware. The daily chart, it was a shooting star formation that's played out really nicely, and we've had a correction back. What sort of correction have we had? Everyone's shouting. We've had a correction back to the 61.8% fib, which is a really nice correction. Looking positive at the moment is we've recaptured all of yesterday's losses and sort of sitting above there at the moment, but it's not really doing anything very, very interesting. So let's sort of see how that plays out. Obviously, US, we sort of seem to get some sort of US influx. Don't know why. But anyway, NASDAQ, again, Tesla mentioned just by Joe, and this looks very, very toppy. Indecision, 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 hanging man, and then what's going to happen this week? Are we going to get that collapse that it's pointing to? On the daily chart, we've had the correction higher. Again, let's take a little look about, see where we've reached. We've not quite reached the 50% retracement. That comes in at 13,500. So we are a little bit punchy this morning, looking quite strong on the US side of things, a lot stronger than the Europeans are looking at the moment. We've got the same in the S&Ps. We've got, we're above the 61.8, so the S&P performing better in terms of this retracement than the other two. 78.6 comes in at 4,200, about 20 points away. Let's have a little look at China and Nikkei, both correcting higher. For me, the real line in the sand for the China 50 is 17,800. A break and a close above there then would pacify me slightly. I still think that this could be the market that leads us lower. So at the moment, it's having a bit of a rally back, but obviously we've got decent resistance up here. So let's see how that plays out. Nikkei is back to the sort of swing lows. This is resistance, and but we're just poking our head above it. And again, have to see how that plays out. Commodities, gold seems to be really on the front foot at the moment. Played out really nicely from a technical perspective. We can actually, let's get us to redraw this. Coming in really this sort of like previous swing high, coming at 1875. We're trading at 1870. If you want to sort of like have a bit of a punt and you're sort of, maybe you're bullish of dollar or something, or not so positive on gold, then I expect we'll see some sellers coming in here and having a really sort of decent risk reward opportunity by selling in front of the 1875 with a very, very tight stop. However, for me, it does feel like we've got good momentum in gold, and obviously dollars back below the 90 level. For me, that's a psychological level, so I would be very, very wary about getting involved and getting short here. A break of 1875 really opens up a move to 1960. We can see how it reacted all the way back here. We had a couple of decent resistance levels which held really nicely, and now we've got the opportunity here to back that up. Or is it going to be this one? Don't know. But yeah, 1875 is the pivot level for me. A close above there on one of the time frames, an hourly, 4 hourly, daily. It gets more and more positive. Bitcoin, I've had a little look at Bitcoin this morning, done a video which you'll be able to see later on LinkedIn. And there was a couple of levels for me really to watch. We talked about this last week, expecting this corrective move lower. We felt that there was the fifth wave has been completed, and we expected a move lower along the lines of a measured move target of around about 42,000, and that's exactly where it hits, spot on. Now the weekly chart doesn't look so bad because it's reacted higher quite aggressively. We're back up to 45,000. And also I looked on the hourly chart, and one thing I want to sort of like show is the volumes as well. This morning I sort of like saw the volumes have really sort of died off of recent times. We've basically got this, for me, it's got the potential to be a double bottom, only short-term double bottom, a break of 46,000, and the measured move target is to 50,000. So look out for that. That's for me going to be the pivot level today. Bitcoin 46,000, gold obviously, as I said, 1875. But yeah, I just want to sort of like see if we can get it was the markets.com that really showed me the volumes and how they'd really died off. Let me try and get the volume up here. No, it's a bit of a different looking chart, but it's still showing the same sort of like effect. Here, I'll show you this is the chart. Look at these volumes. This is a 4-hour chart. The volumes all the way back from September 20 all the way to February the 20.
You sure that's a 4-hour chart? Is it a 4-hour chart?
Yeah, it's a 4-hour chart. It says it is. But we can see it even better on the weekly chart. Look at the volumes up here. Really, really huge volumes. Look at it now. Wow. That's a bit of a concern, especially when you get a big red bearish candle like that on that volume. Yeah. It just tells you that, one big player, one of the whales coming in and getting out of their positions, whichever way they are, short or long, will have a huge impact. So for me, for Bitcoin, we've got this 42,000 level, got potential double bottom on the short-term chart, which maybe it initiates a move up to 50,000. But look, if we break this 41,800, sayonara, we're going to 30,000. And then the overextension potentially there to 20,000. For me, 20,000 was that initial all-time high that everyone talked about. That's when all the retail traders got long. Yeah, if they'd have held it for a couple of years, they would have done all right, but that's not really the sort of like the timeline that they trade on. So yeah, really got to watch the 41,800 level and be careful if it does break if you're long.
Yeah, lovely.
That's me.
All right, lovely. Thank you, Steve. Comprehensive as always. Now let's have a look at FX. Not as exciting, I don't think. Looking at first up the dollar index chart, and dollar index is getting smoked today, down almost 0.4%. Continues to trade within this channel, taking out the 78.6 quite cleanly today, and also that swing low from the 11th of May. Which doesn't look good for dollar index. So we do have some support down here at the 88.6% fib level. Not very frequently used, but may provide some support. And also, if you look over to the left-hand side, you can see it was a swing low from back on the 25th of February. So maybe some support there. We'll have to wait and see. But looking at the sort of lower end of the channel, that seems to be lining up with these lows that we posted back on the 6th of January. So, testing those lows wouldn't be a good sign for dollar index and would indicate that we are going to see a deeper move to the downside. I've got a support level at 88.25, which was the lowest posted back in February 2018 as the next level to target. And below there, well, doesn't really bear thinking about. That's a massive range and lots of fresh air below here to potentially target. So not looking pretty for the dollar index at all. If we flip that over to euro dollar, quite an interesting move from that yesterday, as you would expect on the flip side of the dollar index chart. In fact, this morning, up by nearly 0.5%, taking out this swing high from the 12th of May. Quite an impulsive looking candle so far today, and above that we have this next resistance level from this swing high back on the 25th of February at 22.43. So that is the natural level to try and target today, or in the very short term on the upside. If we take that out, then we're looking for highs back to what we saw in the early part of the year on the 7th of January, up at 123.44. So looking again bearish for anything dollar linked at the moment. Looking at cable, that's also quite interesting. Approaching these highs that we posted on the 24th of February at 142.41. If we take that out, then we're looking for obviously a continuation of this uptrend. And in terms of where we're targeting there, we got highs in place from the 17th of April 2018 to target at 143.76. So all looking pretty good on the cable front. If we look at the other dollar pairs, just to sort of really highlight how weak dollar's looking, this is dollar CAD, again making new lows. I think this is the lowest level we've seen for 45 months. So pretty significant. No sign of that turning at the moment. No sort of sign of reversal candles forming or bottom patterns taking shape. So best avoided, I think. If you're looking for speculative longs there, it's probably not the time. You may get lucky, but clearly the trend is very much against you. Dollar Swiss, similar sort of looking, the 61.8% fib level, which was doing an okay job at finding some support, has given way today, and we're taking out these lows from the 10th of May and look to be heading lower. So the next level to target on that is this 78.6% level down at 89.10. So dollar losses expected on that front. Dollar yen, probably the best play if you do want to buy the US dollar, because clearly this is in an uptrend still on the short-term chart. Maybe some support of this uptrend line potentially, but anything dollar linked at the minute just doesn't look particularly great, I don't think, unless you are selling US dollars. That pretty much wraps it up on the FX front for anything that's interesting, according to my eyes anyway. So yeah, let's move on. Gun to the head trades from yesterday. Steve, you didn't get stopped out on the trade. You were down 27 ticks on our 9 o'clock close from the intraday trades. I was down 40 ticks on FTSE, so not stopped out, but not great. No winners for us yesterday. You suggested that you were thinking along the same lines today. Is that correct?
Yeah, I'm going to go for that. I'm going to basically look at the hourly chart and just like highlight really these sort of like topping looking candles, shooting star, shooting star, shooting star, break. So yeah, potential for a little bit of a flag here. I'm going to go with it. I'm tempted to go long of gold at these levels, just with a tight stop, just to see if we can break this 75 level, have a little bit of a go at it. But no, I'll stick with this. I'll keep the stop at the same level, obviously, because it's worked quite well for that one. And again, target level, really sort of, let's be sort of like big about it. Go home, go big or go home, I think it's called. 2000. Yeah. I mean, why would that happen today?
Why wouldn't
Not
it?
really. Why wouldn't it? Nice one, Joe. Yeah, so I'm going to go with somewhere around here, but you know what I'm like. Oh, 7-1. Perfect. I'm going to target a move to 14,877. Getting short here, 15,461.
Lovely.
And the stop at 15,545. That's me.
Nice one.
Around about 7-1.
I mean, I've got to say, looking around at the charts, I only can see value really in these indices as well from an intraday basis, based on the very, very short-term setups that we're looking at on these hourly charts. So I'm going to look at something different. I'm going to look at the Eurostoxx 50. As you can see here, we've got some resistance that's formed around 4,050. We saw an attempt here at trying to break above it, and again here, but failed. So I am going to sell it now at a price of 4,026. I'm going to place a stop loss above these swing highs here at 4,056, so just about 30 tick target stop, and I'm going to target a big old move down, which may or may not happen today. Probably, won't happen, but you've got to be in it to win it. So I'm targeting a move down to 3,886, which is looking for just over 4.7 R on that one today. Look at the drops are happening. When they do happen, they are pretty severe. So, it could be that you do catch one of those, but we'll have to wait and see.
Yeah.
Look at those. So you've got a big drop there, happened pretty quickly. So it's not out the realms of possibility for us to see a big old dump quite quickly on these equity markets if things start getting spooked for whatever reason.
Yeah, absolutely.
Okay, so in terms of what's going to drive markets today, from a data perspective, we have at 10 a.m. Eurozone GDP. The Q1 second estimate is expected to shrink by 1.8% year on year and 0.6% quarter on quarter. So that could potentially impact our trades today on Eurostoxx and DAX. Later today, we have at 1:30 US housing starts and building permits. Obviously, that's less likely to be an impact on these intraday trades that we've just mentioned. In terms of earnings, they are on their sort of last embers, really. So we've got Home Depot and Walmart releasing numbers. Again, not likely to be big market movers, with the bulk of the earnings from the bigger names already out of the way. So that's pretty much it. Anything else to add, Steve?
No, I think that's it. I think we covered it.
Cool. All right. Well, let's see how we get on, and we will be back tomorrow morning.
Lovely.
Trade safe,
Cheers,
everyone.
guys.
Bye.
Bye.